But we're going to get into this and show you guys essentially behind the scenes whenever we're planning a new Bitcoin farm. This could be with a group, an individual, a joint venture, company. What I'm going to do is take you guys through the actual like templated smart sheet that we start with. So essentially it has a lot of the core activities that you would do in this kind of planning, all the things from zoning to permitting to site selection to what's a cost analysis to perform, the kind of pre-activities before you commit to a larger build, and just to try to help prep industry in general. This is why we're doing this. Like we get several people that reach out to us, have a basic single spreadsheet with some cost, some calculations they've done based on types of miners versus what they think their cost is going to be. And then, they try to get to like, hey, let's go build something. And during that due diligence period of finding the location and understanding cost better, understanding how long it takes to build, what is rapid, what is, could be an impact dependent on your area, the regulatory environment, all of these things that start to kind of like, I would call it eat the project's lunch on going, well, this is going to cost more expensive for me to do in my particular area. What are other options and stuff. So we want to try to give the framework for you guys here today on, what we take you guys through. So I'm going to pull this up here in a second. We'll have a period of time towards the end of this where I'll do a question and answer with folks. So make sure if you have questions and answers, you bring them up. You can do it throughout the presentation essentially. But like, if you want to get it re-looked at when we get to that point, you guys can do it there. If you're missing this live and you still have questions, then you can always go out to like the YouTube. You can post on the X actual thread of this. And we're watching it and monitoring for people that have just like genuine questions, like after we've presented something here. And at the very end, I'm going to show you guys essentially our joint venture that we have. We're effectively opening that back up for participation in that on some of the sites that we already have, and then be part of a larger build out that we're planning and give you guys a view of what that looks like from our joint venture side. So hopefully this is good for folks that are interested in this space, and you can share it to people that are looking at maybe getting into the Bitcoin mining scene, or if you're an existing operator and you may have other investors and stuff, you can give them some of the nuance that we all go through when we're, setting up a site. So that's essentially the purpose of this video. So let's get into what that looks like. I'm going to switch over to essentially the smart sheet that I already have set up, and then we'll go through it top to bottom, and I'll try to explain each of the different sections and the kind of impacts to a basic 3 core themes. Those themes are cost, schedule, and performance, which is a typical project management structure, which the performance is kind of the expectations, the results. When do you present the information to either investors or in your groups? Those kind of the cadence that comes with any kind of project management of that scale. So let's get into this view here. And we're going to bring up a pre-project checklist. This is a initial kind of check punch list. Is somebody ready to commit to a build? You may think you're ready. You may think you have the capital ready and the investments that you want to spend. But this is kind of something that over time we've pulled out of like the schedule piece to just do like a pre-check, a pre-vetting that we're all on the same page before you move into like a project phase. Because once you start committing and doing letters of intent on a location, you will run into some issues related to some of the cost, and then you just want to kill the whole project. So we try to do a pre-vetting here on this, and essentially what this is going to go through and show is these major kind of checkpoint items. And essentially it's like a normal tracker. All this stuff is shared online with folks. Let me put I'm going to add a little screen here so you guys can kind of see me as I'm doing this too. We're going to add a little video capture here on this. I'll make this small in the corner so you guys can still see me when I'm talking. Here we go. There we go. You can still see that it's not a robot talking to you. It is me. There we go. All right, so let's get into this. So at the very top here, it's a pre-checklist. So the way we interact, and this could be anybody else that's in this space that ends up taking this format, you need to do a pre-vetting. You need to find out what somebody is looking for, what their core intention is, and we usually typically do this under a 1 hour consultation. It's $375, and that's what we charge, but effectively it's going to go through what have you done from your own due diligence side. Have you picked a location? Have you talked to any local power companies? Do you know what the availability of the power is? All of those elements that are required for you to even kick off. And cost is one of the largest components when it comes to Bitcoin mining related to the power cost. Your power cost is going to be your most expensive piece, and the understanding of how that power contract works, if it's a PPA, if it's just a rate schedule, if it's a time of use where you only have it on certain times, what are the curtailment schedules, what are all the elements of cost that takes when it comes to the power side. And just like a data center, like if you're doing a data center build, power is a very expensive piece of this, and understanding on what's your risk of the power going up and that. We want to first establish that very first. That's kind of like the entry into the door that gets you into like trying to build a mine. What are your long-term costs, and do you understand what ASICs, the ups and downs of Bitcoin, the difference of difficulty, all that's captured in that first hour. Essentially, we start off in those first 15 minutes, kind of letting everybody understand how a pricing model works on that. And then we get into location. We look into power company rates, property, leasing. Are you going to try to buy something? Can you have the opportunity to lease? All of those factors that go into a single spreadsheet and kind of just roll up the cost to make sure, is it feasible? We have learned that the best way to do that is to take an hour with people. It's a very low cost when you think about it from what you're about to get out of something like that. It's an hour-long conversation. It's $375, and it gets you all of those core things kind of initially checked off. And that may have a follow-on where if we don't have all those answers, or you do not have some of those answers at that time, it may have a 1 to 3 hour retainer that we would suggest after that to say, let us call the power company. Let us figure out if the area has it. Because you could find a good, like I'll give you an example. Our area right now, we have 4 sites. We're about to do a 5th site here. And essentially our local power company is at a capacity with what they have right now from a existing substation footprint. Meaning they could bring more to it, but we have to do upgrades at these other substations to make it attainable. So we're working with another power company that's near here to kind of establish their footprint and see what we can get various sites on, from that standpoint. So you may have a great rate, but then there's no capacity available for you. So some of those capacity surveys and studies, some of those initial conversations allow for that to kind of get through the door. And what I would say is if you're having problems with your power company to try to get to that information, if you're just calling in, it's going to be hard because you're going through different layers of corporate structure. You need to get a hold of the business, any kind of business opportunity folks, any kind of growth aspects of the power company. So if there is a commercial growth division, somebody that's working with larger entities, construction, that's the person that you need to talk to. You need to talk to their business development first, and then they will kick off, some level of a project or a survey within the engineering departments, are the way it typically works. So you need to work with somebody that is not just the normal call in, rank and file, to get you a proper assessment of if it isn't feasible, let alone the different power rates. So that kind of gets us into this kind of second bullet point here, which is that contacting the power company, understanding the cost breakdown. And when we talk cost breakdown on the power bill, we are talking like a full breakdown of each component of that bill. We want to fully understand what our risks are. And what I would say by that is you can get into a situation that it's not just consumption. When you start getting into 3-phase high load factor rates, you kind of transition from just your consumption. So you can think of it like a resource. It's like water going through a pipe. How much did I use? Did I pay X? When you start talking about high load factor 3-phase, something that's going to be continuous use like that, they'll start to hit you with something called the demand charge, which means whatever your peak in that month is, that is going to be one of probably 4 different rates that you're going to be paying. And that will set a standard. Like, so if you have 5 megawatts or you're going to try to build 5 megawatts, and the reality is you run about 4.5, if you peak somewhere in the month at 4.5, but for whatever reason you shut down a pod or a container or part of your farm, you still will pay 4.5 megawatts against that one part of that baked rate for the whole month, because you set the height at that rate. So if you shut down and let's say you go to 2 megawatts, you're still going to pay for that month the 4.5 on that part of the rate. And the realities is that eats your lunch. It takes away a lot of your margin if you don't do that. So understanding on those kind of structures in your power company are very vital to your operations, your normal O&M that you'll be doing on, you'll be handling moving once you're live. So having that up front allows you to make sure your cost modeling is correct. And it also teaches you the behavior for your ops team of what you need to do when you need to shut down certain times, when you're going to do kind of transitional stuff. You do it towards the last of the month. You shut things down, you fire them right back up. Your plan to action is in like a 12-hour window, because you're trying to reduce your cost in those kind of aspects. So it really, when you look at the total cost of ownership of a Bitcoin mine, you really need to manage that, especially if you're doing like 1.5 megs and higher. You need to understand the ebb and flow of the billing side, because this part will cost. And getting that early before you even commit to it gets you an understanding of how your model works. Now, we estimate that cost at about a 1 to 3 hour rate for trying to establish that and help with build the model. Not all these are things that you have to pay for. You can do it yourself. This first 1 hour call, typically, we'll get folks that come back and they've already done all the research. They do it on themselves. They keep that cost to themselves. We don't require it as an example for us. We just try to set you up and can do that work for you if you need to. We get into, once we narrow down that location, then we get into something called a feasibility survey. That is a typical normal retainer service with us as an example. And granted, throughout this whole thing, you guys are going to see commenting, we're pitching our services obviously through this, but I'm also trying to make sure that you have enough information to do this on your own, right? This is a shared expertise that we've had, and a tailored expertise. Like, we didn't start knowing this stuff. We went through several iterations of this now that we've picked up a lot of the pitfalls, and I'm trying to explain how this functions with you guys. So, and don't worry, this template here and the follow-on project schedule that you guys are going to see, I'm going to export these and have them as part of the description below, so you guys have a snapshot of this so you can clone it, make your own. I'm effectively gifting this to you guys to start your own project. This will allow you guys to either get started and then maybe do what we're doing and pay it forward by sharing your experiences online in some way, or sharing with us like, hey, we found a different way to do this. This is crowdsourcing information at its best, like sharing information, getting people started. But if you're just have capital and you're like, I don't have time to project manage, holler at your boy. So this type of activity of going down to the feasibility survey goes anywhere between like $3,750 to about 10 grand. And this is kind of a split thing. This is part our team, as an example, a project team, somebody managing this. And these are the various surveys that might have to go to the power company. So as an example, our local power company will charge anywhere from $3,000 to $5,000 to go and give a actual map of where the high load's going to come from, what is the secondary step down's going to look like. They're going to give us a true feasibility study on the power side. So typically it's just on the power side to understand what the delivery is going to look like, what are the terms of service when it comes to uptime, what's the risk associated to that. meaning like if there's some kind of weather event and you're down, these are going to be input pieces of information you're going to need for your insurance. So there's different various levels of insurance that you'll end up having to pick up. You have asset, and then you have loss of production, essentially insurance that you can get with some insurance companies, where if you have like a big event and something happens with the power and you lose power for a week, 2 weeks, and you're down, you still have all your liabilities of debt servicing and all that you have to pay for. So you may have to rely on something like insurance. The input survey from this activity gives you some of those inputs for that information that you'll need for your insurance. So there's various deliverables here. You can see I've tried to put some description in here for you guys, but it comes down to the stability of the power. It's a weather analysis. We'll look at wind patterns. We'll look at placement before we get into mock-ups. If you're going to use containers, where are they going to set? How does it look from a wind pattern standpoint? What's the rainy seasons? Is there going to be snow issues? You get a lot of those core inputs that you're going to need in your design. Are you going to have snowbanks? Are you going to have issues with, if you're in a farm field, when do they harvest? All of these different inputs that you're going to want to know, because it's going to affect your O&M, which is your operations and management of this facility. You're going to want to know, how often am I going to have to clean filters? All those inputs come from these feasibility surveys. And it gives you an understanding from a zoning aspect, from land compliance, local regulatory environment. I've worked with clients before where we were pretty gung-ho about putting it in something, made a few calls to a city council and knew we were going to have issues. They were very skeptical of it. In this particular area, there was some concern from a different couple groups that were there, and it ultimately came down. We made it about as far as this, and the feasibility survey came up and said, this is probably not a good area to produce or create this farm in. Here's the reasons why. And it saves you at least, you spend some little bit of money, but it will save you hundreds of thousands, if not millions of dollars of long-term issues if you're not in a good regulatory environment, or somebody that's going to work with you, or it's just not a good placement for the farm itself. From a sound standpoint, design, all those type of things. So that is what that kind of pre-vetting is. And, the costs are associated to it because you're getting support from somebody. You could obviously handle this yourself. Those, these two costs here could be handled by you as an individual or you as a group. Joint venture, you guys could take that in-house and not have any of those costs, make all those calls. But at the end of the day, you're just compensating somebody for their time to go get that information for you. Then we get into what we call a JAD session. This comes from my background on the development side, like software development, services development, infrastructure as a service, that sort of thing, which is called a joint application development session. I'm just using that terminology in the structure of it because essentially it's the same thing. This has to do with physical, not software, but it's the same sort of disciplines and capture that's required in part of a JAD session, which would be a roll-up of all this information fed into a cost analysis, a P&L, which is profit and loss potential, usually a 5 to 10 year plan on that. So you have a pro forma that will come out of that, a balance sheet look of what your basic estimation cost is, the quick swag, create your pro formas that feed that, and then go into the different, your decision tree of your go, no go based on, that regulatory environment, the permitting requirements, all those things that you find out in discovery. And then it gets you to a, do we go and what's our risk? What's our risk going in to now kick this project off? And when I say, it sounds like we've already kicked the project off by all the stuff I've just talked about, but this is all the pre-setup, meaning we haven't cut any ground, you haven't bought any land, there's no lease involved. This is all the pre-work that we're talking about. And it's a lot of work. A lot of the stuff to the left of like one of our latest builds where you guys seen us build cradle to grave from a grass field to fully operating in 3 weeks. To the left of that was about 2 months of this stuff, right? So we had to do all of this pre-planning, understanding, and then that teed up everybody to then go build and do everything in a very rapid order. So, if you're you have to go through all the pre-planning stuff. You have to get it all set up. Then it starts to click together once you have a lot of those things kind of dialed in. So this is all that pre-work. And again, it's just a pre-work checklist. Not a lot of overhead on that more than from a capture standpoint. Just a simple sheet here. And it's just, has it started? When are you expected? Normal stuff like that. Then we get into a pre-kickoff checklist. So if we're agreeing with a go, no go, then it's what's the next steps for the pre-kickoff, which we get into the actual true swags. So the first estimations are literally just us from our, like, depending on the area, of making some basic calls, but not official quotes, because you don't want to waste a lot of people's time if you're going to end up not going with it. So this is a very quick kickoff for a swag, which is a scientific wild ass guess, which is essentially there is detail behind it, but some quotes will not fully come in until you're ready to start breaking ground, because at the time material costs change. Some of these projects last a lot of time. Our first swags, as an example of one of our sites, from us taking the initial swag to actual execution was 8 months. Well, pricing changed because we were like just coming out of COVID on that build. So like a lot of the core costs that we had elevated, it was like 53 grand for parts on one thing, ended up being only about 30 grand because the cost had came down. So the swag is essentially just a budget, toss of the dart to give you essentially scope. And then as you start to get into the project schedule, which we'll get into in a minute, you start to go against those, either draw down on those budgets or elevate some that have now changed in price because the time that you've scoped it versus the time your execution may change. But you need a baseline to start with. So that's what this activity is doing at a pretty meticulous capital requirement level, meaning it's not just big buckets of what's the ASIC's going to cost or the building's going to cost, but it gets it a little more nuanced down into what's racking, what's your PDU outlook. Are you going to use containers? Are you going to build a building? Is there going to be fire suppression in the building? All of the things that are the core components that are cost components in it are now broken down into essentially capital buckets and project cost buckets. So then you can start to do your phasing. That's all your strategy from other items like contingency budget and like what's your ultimate, you can't bust this limit, right? Like what's the cap, right? And trying to get that fully established so everybody's on the same page. And then you go through from that, you're going to get into a critical showstopper checklist. What are the things that could impact you and how do you mitigate those? Before I go into a full-on project, I want to make sure I have an actual plan on what do we do. And I'll give you an example. We're about to do one now. We're about to do a project now. It looks like it's going to be a warehouse, but we may get into a regulatory issue where I can't not put a building together without fire suppression. Well, we're not going to put fire suppression in a Bitcoin mine. We're going to have dry powder, fire extinguishers there, but we're not going to put a whole system in there because I don't want to saturate water or dry system like Halon because I'm just going to vent it. So there's going to be aspects that we're going to have to work with the county and all the different folks to, maybe it's a new requirement because it's a Bitcoin mine. That being said, it may be easier just to pivot to a container because we already have four locations with containers around here, and we already know we can get through that kind of stuff, from a regulatory standpoint. So there will be a critical showstopper and then a reaction to it. We want most scenarios that we can built out, right? And so you got to have your ability to pivot quick because there's time and money. If you have contractors involved, you got people waiting, you got costs that are overrunning in those kind of scenarios. We want to manage all that. So it's the bid strategy, how many people are we going to target for bidding, if it's GC and different civil work and electricians, all of that stuff. Having that plan ahead of time and then typed into that project schedule helps us kind of navigate with a multi-party team. A lot of people working on things that you can give belly buttons to and run. So that is the pre-checklist to get a project kicked off. And cost can estimate, we've done it as low as like 11 grand all the way up to, it could cost up to 50 grand depending on how big the project is. If it's 20, 30 megawatt location, it could even balloon even further. It just depends on how big that is from a pre-checklist project and then how many people we need to involve in that. But you can get it done for that, like around $10,000, $11,000 from all of that kind of pre-setup stuff. And if you're doing it yourself, you may even be able to reduce it even further. But from having a support there. That's what it comes down to. So let's get into a task tracker. Now this in a normal will get transposed into a full Gantt chart driven WBS, which is a work breakdown structure, integrated master schedule, which is just a schedule with times, dates, descriptions, who things are assigned to, what's the project status, what's the start and the end dates to be able to set your timing with your various contractors that you're going to need to do these builds with. This is a normal project management process, and being able to start from a template helps folks out tremendously. Even if we've had folks that have just, that have reached out to us and have just got this part from us, like where we'll go through, help them get through this phase, and then they take it from there. They handle their own GCs, they handle all that. We're open to do that for folks too, to where if it's just setting you up and then just being a consultation from that of helping you kind of get through it, and then you handle and bear all the responsibility of deploying and building it out, but us helping you with structure and just where things that might eat your lunch at. So I always like to start it with capital management as one of my very first top things. This is kind of more of a lessons learned to where we've started projects and then like somehow or some way capitals became a problem. And I want to make sure we have an understanding on cost. We have a due diligence on the swag. And then we build out this project schedule based on those swags, like when a procurement need to happen. Every project is different. Some projects and some folks are going to buy used machines. They don't need to spend that capital until the last moment. Now they're taking a tactical risk if Bitcoin jumps a lot and then the pricing of the machines go up. And that's typically a thing. When do I buy machines? I've always worked with people to try to figure out the best timing for that. But, considering how big a build is and where you need to store it, there's a lot of different things that will go into that schedule that you'll see down here of like, do I have to handle storage? Do I have to have insurance on that storage? If you go buy $1 million in miners and you have them in a third-party location, you're going to want to insure them. There's a lot of these various costs that end up occurring on that you aren't really anticipating. So trying to lean out the delivery of things to land when it needs to saves you some of that cost burden, saves you some of that insurancing, things that you have to do from that aspect. So having some due diligence on that swag, that's what I mean by that. What are the key elements and when is the timing need to occur from a very high level, and you start in like month buckets, like I would like to have this thing built by February. If that's the case, then work backwards. When do I need to start to order stuff? And so you take a template like this and then you back those dates in based on what your targets are. Project setup and critical path updates. So what I'm talking about is once that template's in there, you're going to set up your basic structure of a project. This right now is done like that. And then we would start to highlight certain things that we consider a critical path, what has to happen. I'll give you an example of that. If you're going into a building and planning commission, those things usually only happen monthly. You want to ensure that you are setting up the requirements of whatever build you're about to do for your next regulatory meeting, council meeting, planning and building commission meetings. You want to line up your data that you need for that ahead of time and then meet that next planning commission so you're not slipping a schedule for an entire month. That is a very critical. This is the main thing I would tell you from project management on something like this. And this goes for anything. If you're building a normal building, it has nothing to even do with cryptocurrency. This is something that'll eat your lunch. Things that you don't control, but you have to fall within, like a planning and building commission. And now you're slipping the entire team an entire month before you can get the go ahead. You want to get ahead of those things. Those items are critical path, things that you do not control, but you need to align to a schedule. Identifying that when and how very early is important and critical in there. And then you put those hard dates in there, and then everything to the north of it on that schedule, you need to make sure that you're aligned for it. Then you get into your financing, secure financing for the project phases. Part of that due diligence and that swag is to zone out and phase out when capital is deployed. So let's say an entire project is going to cost a couple $1 million. That's where your swag is at. You're not just handing somebody $2 million and saying go. That's not good capital management. You wouldn't do that with a normal contractor that's like redoing your bathroom. You pay him 50% up front, help pay for materials, pay him maybe 30% when it's almost finished. And at the very closeout, when you have accepted the job, you finish up that last payment, right? That's a normal workflow. Everybody that does contracting should expect that they don't get everything up front. You need to have a good cost structure. You need to have that incentive out there for those builders and folks. So building out a financing phase for whoever's handling your books is critical. They need to know when they need to pay for things. They need to know when it's coming up, and if you're over or under budget. Anything that's going over budget on this schedule should have some kind of process in place that is for change orders. Change orders should go through whatever committee. If you're making changes, sometimes change happens. Well, not sometimes. It always happens. On every project, you have plan A, you'll end up on plan Z while you're at the end, right? It will change 26, 30 times. Those should have change orders that are either reducing your schedule or is having some impact. You're capturing it for two reasons. You're capturing it, one, because you want to control cost. You want to understand what you're about to pay for. And two, it's also really good for lessons learned if this is not going to be your first foray in this process. So you're going to want to capture what worked and what didn't. That is part of that change control process. That kind of feeds into both of these things when it comes to project setup and understanding your finance. So then you'll get into a planning phase, which is like I call it pre-closing. So now this is, you've accepted the project. Now start to kind of get into the nuance of that project, and you start to lay out your cost schedule performance plan, which is essentially what we're looking at here of when those phases and how does that look against the schedule. And the performance side is, what's your expectations? What's your cadence that you're going to be talking to investors? What is good look like? Is good just ahead of schedule? Is good under cost? Is good that you've established some other kind of relationship? What is required for this to be a successful project? The communications plan. This is essentially just making sure everybody's on the same page. This is more of a lesson learned. Like, we've had folks just, hey, go build this. And then it's like we send emails, they don't look at them, or, maybe they're super busy and it's like their fourth priority. But having something that makes sure expectations are set, having a meeting cadence. We look at once a week is a good one, just to have a kind of roll up of what happened. And essentially your project schedule, as long as you're keeping track of everything, this is your Rosetta Stone. This is telling everybody where things are at and how you're progressing. And the level of detail that you put in here, you don't want to make it so detailed that it's every nuance, but you want the major buckets in there. You want the networking phases. You want the electrician and the in-plant and out-of-plant activities in there. You want those kind of things in your project schedule. But this is essentially what your progress report is. And we'll get into this here in a second, where it goes into a dashboard. A lot of the projects that we build end up coming up to these project dashboards. This is a very lean template, where we don't have like links and stuff in there. We have other projects that have like breakout of links. It's kind of, think of it like a SharePoint site on steroids, but it's telling us what things are in float, what things are at risk, what's the current project state, who's a project manager on it. Cause you might have other joint venture folks that are in it that don't see it all the time, but have access to this dashboard and may want to reach out to a particular project manager or somebody that owns the task. Having that kind of tracking on your project allows everybody to have a one-stop shop to be able to see where things are at, and they're not sitting there on you all the time about where things are at. You just point them to that project planner and say, hey, this is the schedule. This is where we're at. We're either red, green, blue, things in progress. You can set your tolerances on there, but at the end of the day, everybody's shooting for the same goal to complete it. So communication plan and cadence is critical to have that early and understand when things are happening. Risk management plan. Essentially, the risk management plan is really easy. You're going to have risk. You're going to manage through that risk. Risk could be slips. Risk could be non-compliance for something, inspection stuff. Things that you're going to identify. When I usually start with a risk register, it's empty. I don't have anything on there more than things that unless I know something's about to come up. If I start to hear something as the project starts to go, it gets added to the risk register right away. There are some things that you could preload in there if you know that you're going to operate at risk, meaning you are going to move ahead with a particular phase and you haven't got your answer yet on that. You would put that on your risk register. I haven't got the answer, but we're going to move forward. We're going to operate at risk. Some folks look at also operating at risk is, an invoice hasn't been paid. And if you're working past that 50%, initial 50% to kick it off, you're just keeping track of your project budget allocation, meaning let's say we're going to charge 100 grand, 50 grand's up front, and now you're at like 62 grand of spend. You're at $12,000 of risk. Communicating that as part of your communication plan to say, hey, from a cost aspect, we're upside down on this. We need to get this next phase paid for. There could be some reasons why it's not there, especially if you start working with larger entities or big joint ventures, publicly traded companies, things that have all these layers in it before payment could be issued. You also have to think of payment terms if you're working on 30-day terms, any of that sort of stuff. From our project stand, we don't operate that way. It's like an upfront cost, and then there are schedules when they have to be paid. It's not about 30-day terms or anything like that. It's just we're a small business and we need to have capital when we need it. Now, other vendors, different story. If you're doing electrician work and then they have 30-day terms with whoever their vendor is, you can have all that, but you need somebody to manage that and manage up, right? That is activities as an example of something that our team would do in support on that. And then ultimately a strategic plan that kind of rolls all of those up. One-stop shop. This is not with every build. On a small build, like a 1.5 megawatt build, that's maybe all in $700,000. I wouldn't build a strategic plan for that. We all know what the goals are on it. We'll keep it very high level. If you're talking a much larger facility, 15, 20 megawatts, maybe a mining building, a maintenance building, there's going to be bath. So let's get back into this. We were at, again, the pre-planning, pre-closing activities, which really comes down to like the scope and the scale, communications plan, cost, schedule, performance stuff. So let's get into the property and planning piece. This is now that the project has been blessed. It is moving forward. Now we're starting to get into real commitment level stuff, right? We're looking at, is this going to be a leased property? Is it going to be a purchase, which has its own set of tasks and stuff related to that? There's letters of intent to multiple parties. So we'll work through this, the planning phase here one by one. So lease and purchase plan. So essentially this is going to update your cost and your P&L. So if you have a separate worksheet or whatever you're working on that, you're going to start to estimate some cost. You'll work with a local planner. This could be a broker. This could be a realtor. If you're looking at property, critical elements that you need to be asking for, which we have in a lot of the infrastructure and asset planning piece, is some of those zoning requirements. If you are going to be putting containers on a piece of property, be that a lease or a piece of property, when you're talking to the broker, there's a high chance they're not going to know the requirements when it starts to come into planning and zoning related to noise, look, feel. They might have the look side to say, hey, you need to make sure that it doesn't, look out of place in a particular zoning area. But these are questions that are going to come up as part of that process. So you need to be aware of your surroundings, what's around it. As an example, one of our latest builds, it's in what they call an I-1 zoning area, which is light industrial. There's a concrete company right next to it. So like that kind of stuff, that, okay, there's some pretty decent zoning here. There's containers on the site. There's gravel. There's probably a high likelihood that it's going to be okay, but you still want to get to all that vetting. And, the broker, if you're working on a property, this is a lot of their responsibility. You can put those tasks and questions to them for them to provide you answers. And, follow up with the local city council folks on that. Producing letters of intent. We have in here that we're capturing when those things occur, who are they to, and you'll add to that project sheet based on, do you have to give it to the power company? Do you have to have it to the broker? And those letters of intent are a way to start it. Sometimes those are pre and post escrow, meaning like you can send a letter of intent, but you haven't started the escrow process, meaning like you haven't put money down on it. You're not committing to it, but you need to go into things showing a commitment for you to get into some mock-ups for a planning commission to know that you're serious, right? You have to say, we've already produced a letter of intent with terms that we need to make sure it can get through zoning, as an example. So, and then can you get the permits? What are the timing? Because it's not just a matter of if you can get the thing, it's also a matter of when will it happen, right? So it's the can you, and then when is it going to occur? Because when it's going to occur, it's going to fall right back into this schedule and figure out, is it going to slip your time? Is it going to cost you more money? Is it take it out of that economic feasibility for you? Those are critical pieces on that letter of intent. You want the ability to back out of a deal if you're going to have a long lead time item that when you're going through planning, you find out, hey, this is just going to take too long, or we can't get the right zoning. So that's what the letter of intents are for, is that it gives you some kind of agreement that isn't fully committed, but it has terms. That gets you into the various things that you're going to have to commit. So like in our areas, the local power companies require you to become a member. They're like a nonprofit structured entity utility where the members own the actual utility from a nonprofit standpoint, and they'll make you sign like a member agreement. They'll do a background credit check, that sort of thing, for your business. If you're a new LLC, that's fine typically, but like you still have to sign up an agreement for just the service. You haven't committed to like the load or anything like that. It's just usually service agreements, getting that kind of stuff through. Some of those lease arrangements, if you're on an existing substation, there's going to be some terms related to that. You're going to want to know how long is the release or the lease. And typically you'll go through what they call a red line phase, which means you're going to read through it, and you really need to read through it. This is a big commitment, and you either have a lawyer present to look through it, or, send it to them and let them make sure that, hey, is there anything in here, force majeure? Is there, weird terms, payment terms? Or do you have to have a huge deposit? Some sites that we've worked with have up to 2 months of the upper tier of the load, meaning if you're at 5 megawatts at about 5 cents is about $180,000. So it's like, if you have to pay 2 months of that, that's $320,000 you're walking to the door with before you even get service. And that cost needs to be understood. Some places require only 1 month up front. And this isn't money that's being spent by the power company. This is just a hold. It's like a security deposit. And some will be in interest-bearing accounts. Sometimes they allow you to take a bonded approach to where you put up 50% of the money to a bond, and then you get a security bond in lieu of that full amount, so that you're only putting up $80,000 on 160 as an example. It all comes back down to the power company. So the bottom line, there's options on all that stuff. That's where you get into the membership agreement and red lines. You got to understand what your upfront costs are going to be. That is a phase that we would track. Purchase and lease contracts. That's going to have its own separate sub process. So I have it as a wedge, as a template, but that will break out to like a land purchase requirement. Underneath that, we'll have the real estate process that you need to do. That's going to be title search, all these other things. As a project management team to help support that, we would track that, but ultimately the actions of those activities would be with the real estate folks, and then they're going to have a whole bunch of sub processes. Now, because we like to understand all those impacts, we typically put those kind of processes in our spreadsheet or our project sheet to track what they're doing, right? What are we waiting on? What's because sometimes you know how it is. They're working with a lot of people. They may not be operating at the pace that you need them to, so you got to kind of be on them about it. And you're just trying to click through expectation management with these various entities. We try to include everything we have either controlled or not controlled in our project workbook, so we understand all the elements that are at play, and what are our potential risk and impacts, right? Because I don't control it doesn't mean that I don't have any influence on helping the result, right? So sometimes just project projection of like us showing like the realtor agent, like, hey, we need to get through this, like figure a way, make some calls, let's get this done. Here's where I'm tracking and what my impacts are if we don't get it done, right? So the land purchase piece is a critical piece. There's a whole bunch of nested stuff under that we don't have in there, but that we would work with you to help get included in that. Then you get into infrastructure planning. The infrastructure planning side is once you have that site, so you have the lease agreement, which zones out where you're going to be. Let's say it's on a substation, or if you have a piece of property next to a substation, what's that going to look like? How's the service going to slide in from a primary side, where the transformer is going to be? There's setback requirements that we would put in here as checkpoints, a setback, what's the setback requirement? Is it been met? All of those various feeders that feed into the electric plan, sewer and water plan. Sometimes you need just a general civil plan, which will show grading and where runoff happens. It really depends on the regulatory area that you're at. If you have to address specific things, typically we'll come in there with everything and just redact things that we're not having to do in a particular area. So some places require a noise survey. Most of the electric companies these days now have shared enough information on Bitcoin load plans that they understand the phasing and any kind of residual issues or harmonics that occur with Bitcoin mining loads. And essentially, like from a load plan from our standpoint, we usually provide the power company with an example of what a harmonics plan looked like from a couple mines that we've done. So we show them like, here's the load change if we're curtailing and how we go about curtailment. Sometimes that's just a phone call. We have literally just been consulted to just do that before, where it's just a couple hour consulting fee, and we literally help a power company understand what the load pattern is going to be and help a particular person figure out like how a curtailment customization on like their foreman will work, where you're taking down tower by tower and you're not just dumping 5 megawatts back onto the grid right away, causing kind of an oscillation or any kind of issues. It puts stress on some of those components when you start having a lot of ups and downs on the power load. So that does go in there as part of that infrastructure planning and understanding on the things that you have to consider. This on a data center side is a big deal, especially on like AI compute as an example. Some of those AI computes, when they're going through like back propagation and doing actual model building, like there's some interesting things going on now on that, like 54 to 74 kW per rack load is the oscillation of what happens in the load factors and burning up transformers and stuff. It's crazy stuff. We'll maybe have a whole other video on like a data center side, but on Bitcoin mining side, we really control it based on curtailments when we want to take certain machines down, that sort of thing. Then we get into a network and internet plan. Internet plan, you would think would be pretty easy, just like bringing in internet, but there is things to consider. If you're in a larger mine, I would say over 5 megawatts or right close to 5 megawatts, you're probably going to want redundant internet in some way. Sometimes that's LTE, but having a plan on that, saying I'm going to do an LTE hotspot, it's going to cost me $80 a month. Maybe it's a Starlink because it's an austere location. You don't have any internet ran to the site. You can use Starlink. We use Starlink at several of our sites, all the way up to 5 meg, no problem. We have no issues on like, getting the shares and work. It's not any less or impact of count when it comes to, do I have like orphan shares or any of that kind of stuff? Is the workload getting submitted to the pool? It is. Starlink works fine on multiple sites. We've had 20 plus months of this operating, no problem. But having a network plan, having or an internet plan rather, the network plan is really the network layout, understanding where the underground is going to happen with fiber tubes going between facilities or locations. If you're going to have a fiber plan internally, and I'm saying fiber, if you're talking logger runs, some of these sites, like one of our upcoming sites is going to be probably a 60 by 120. It's going to be 120 foot long, essential wall of a compute. And, just getting that extended from point to point, having the different switches, layer 2 switching to understand, what's going on the network side, having that with fiber between the different switches and aggregation and that sort of thing. So having a good network plan, a good resilient network plan, if you're trying to push firmwares, that sort of thing are very good. Having the ASIC plan and load plan as an example, having a very basic mock-up. Again, this is pre-engineering drawings. These are the requirement gathering aspects of it. So having a load plan of where, let's say on a 5 megawatt on a building, you may have two 4,000 amp, primary cabinets, which are bringing in your 2.5 megawatt services from 2.5 megawatt transformers. You'll have a twin 4,000 amp setup that will then feed into essentially 8 per 4,000 amp service, 630 amp breaker setup, where that's your step from secondary on the transformer to disconnect to the 4,000 amp service to 8 of the separate 630 breakout panels. Then those go to your various PDUs. Essentially, each 630 is giving you about 90 miners of constant load of up to 4,400 watts. And you'll be at about 75% of your load factor if in continuous load in that kind of setup. So 4,000 to 630. So to be a total of 16 630 amp, setups. It sounds like a lot, but the reality is that it gives you plenty of overhead to then if you get into overclocking and that. And then those will step down. Those 630s will go into essentially 30 amp breakers or a pair of 20 amp breakers for, single phase 20 amp if you're at 277, single phase 30 amp if you're doing like 240 or 208 connections, which I wouldn't recommend 208 on ASIC mining, but works fine for GPU mining. But then that's your kind of breakout. But that's an example of a layout from an electrical plan. You work with a certified electrician to make sure that's NEC compliant from a grounding, a bonding, all those types of things. But just doing a basic layout of structure that also includes any of your plan related to your hot and cold lane design and boxes, and then what's your CFMs that you need to have coming through there. How's your filtration work? Those kind of plans coming into that infrastructure planning side. So then that gives you the basic site footprint requirements, and that those gather mock-ups and then are sent over once approved internally and everybody has their expectations set. You then get that over and submitted to architectural, structural, and civil engineers. Now, if you're doing just containers, it's not so much architectural and structure. Structural, essentially, you're going to have an electric, map of where things are going to land from an electrical and a lighting aspect. If you need to light up a site or not, just from visual standpoint. You may get into a little bit of just a simple structural plan when it comes to if you're putting like some kind of stilts or something that's holding up a container as an example, but it's a very simple plan. I mean, that's a $500, $800 total all-in structural plan for just pillars and just kind of placement. Very basic structure standpoint when it comes to containers. It could be $5,000, $6,000 though to have like a building done right, even more. I mean, up to $12,000. To have it fully, if you're having bathrooms and all the other related activities. We've had it as cheap as $1,200 for some plans, but it just depends on what the build is to really understand cost, from just a plan, structural, civil work being done. And then that stuff gets submitted over for the engineering stamps. And this is really the kind of setup and approvals. And it's at least phase 1, plan 1, version 1 that gets handed to the engineers to then start going to do their work, or the GC folks to start doing the construction and stuff from. So that stuff will run in tandem when you're going through asset planning. And then your asset planning is really when you get into you understand what your scope is going to be from the activities prior that we were talking about. And then you get into ASIC and GPU, if you're doing GPUs, the equipment planning and scope. Like what's the actual equipment? You're calling brokers. You're getting prices per terahash. You're getting schedules of when deliveries can occur. These type of things then get put under as subunits under each of the different, when I get into the procurement and logistics aspects, you'll see kind of breakouts of when do I expect equipment and material to show up? Where is it going to be stored, and does it need to be insured, right? I'm capturing, we need to capture all those various elements in that process. Then we get, you're going to do your pro forma updates based on your revenue targets, because between your time for planning to time to get to this execution, a few months may have occurred. So your models need to be updated. Your cash flow projections need to be updated. Bitcoin is very different in price. I'm using Bitcoin as an example. If you're mining Bitcoin, it changes in price like daily. I mean, if we would have done this 3 weeks ago and it's $55,000, it's a lot different from a 4 or 5% network increase and then a 10% to 12% Bitcoin price increase. Margins have changed, right? So it's a ebb and flow environment, and having your projections updated typically daily by updating your models are good to understand where you're looking at from a target standpoint. It also might drive some of your decision and budget based on the types of ASICs you're going to do and the risk you're going to take on the types of ASICs, maybe going with something that's a little more expensive, doesn't have a huge amount of history, but looks very promising, something like an Auradine or an Epic control boards for some of your legacy Bitmain machines. Or, are you going to go with the brand new S21 Pros? I mean, what's your plan from an aspect and having various cost modeling based on your ASIC selection there? Having that in there. And then, of course, network equipment quotes. I mean, network, we put in Ubiquity equipment. We're very big, strong believers of Ubiquity equipment. We have it everywhere. We like the telemetry and site management and aspects related to that. So we try to make sure that we have, a couple different approaches, somehow all the way down to the machine level. Some are just at a one level up from that to where the controller is handling to the unmanaged switches, and then we at least have this zone a particular miner might be within from a site mapping aspect. But those are things that go into like the network planning. And then we get into like what I call closing activities, which are updates. Again, you're updating your cost schedule performance plans, and then you're getting all those results and plans back, and you're taking those to the GC. This is when it starts to switch over to the GC. So you're taking essentially those construction plans, you're going to the general contractor, the person that's certified to actually build the building that has the GC, certify the COIs, which are the certificates of insurability, all the different elements that come under that. There's a lot of various breakout elements that we would have underneath these plans to ensure the checklist of, did it go through a proper bidding process? What was the strategic bidding process in general? Or, using local unions, using local builders and folks that are part of this, civil work or the electrician work, getting you 2-3 bids in. Who's got the time? So it's not just the bid, but it's also the time that they can commit to it. Can they commit to doing the build right away? Do they have the folks? Are they going to, what's your subcontractor status? Do you allow them to use subcontractors? How does that work? How does the bonding and insurance work around that? You have to manage that aspect to not just hand money to a contractor and hope that things are going to go, the way they're supposed to go. We've learned through several builds that you really need to have a handle on that. And you're not micromanaging them. It's just a view only, right? I'm not telling them what to do. I'm just saying, hey, how's things tracking? Who's this person? Who's going to be on the site? Having an understanding of who's going to be there and how things are operating, right? Having control of that build execution side, even though they're operating it, right? You want to know what's going on. Getting the civil plans, and then working through, because you have these, and sometimes some places, depending on your municipality and the regulatory environment, you may or may not need the actual stamped plans to move forward. Especially small businesses and stuff, sometimes they'll just get the notional plan and say, hey, give me the final when you're done. What changed? And then give me the stamped final plans from the blueprint side and all that. It really comes down to the different areas that you're in, of what the requirements are. But part of that in the early discovery tells us our path forward. Then you get into, again, the zoning, submitting it to zoning and planning, making any kind of submit it and required changes. Do you need to, I put this in there as part of the template, is we've ran into where we've needed special use permits on, let's say we put a mine on a substation next to agriculture land. We need to inherit the special use permit that substation's sitting on, and inheriting the special use permit to put it on agriculture zoned land. So we've successfully done this a few times now in our area under a fintech operations. So it's financial technology operations as a special use permit on, the substation. So we inherit essentially that special use permitting, and then receive your conditional approval to move forward. At some point at the end of the day, it comes down to, can you move forward or can you not? And what are you tracking as your impedance to not do that? And then, so that's the zoning piece. So that gives you kind of the framework to work within. And then from that, you go into your permits, which are going to be from civ permits, your civil work, which is going to be like your culverts, if you're crossing, any kind of ditch or anything, your gravel or concrete or paved driveways, your fencing requirements, all the permits that you're going to need related. You might need DOT, which is Department of Transportation permits, if you're just off of like a main road and you're going to have cranes coming in. There's a lot of various nuance to the builds that kind of eat people's lunch if they're not used to understanding that you're going to have these kind of things pop up, like setting expectations early and understanding like, hey, we might have to reach out to DOT. Let's start that process now. Again, everything in this stack that I'm showing you, top to bottom, this whole project plan isn't linear. We go through and say, can I do that now? Do I have all the information I need right now? That is part of the activity that you're doing in your agenda during your meeting and planning with folks to say, can I do any of this stuff now and start it? Do not wait if you don't have to wait. And when you get certain pieces of information that is dependent on it, then you can go in and go do that. You can get into some pretty meticulous project management stuff where you put your dependencies and stuff on it. On smaller projects, 1.5 to 5 meg, we really don't get into that heavy, deep, dependency management stuff. But on much larger projects, if we're talking like 20 to 50 megawatt, you're going to have dependency and contingency plans in place for your build, right? You're going to see what is our critical path to get some of these things gone through. But so just understand that there is some of that. I put in here some basics that, the GCs, by and large, sometimes the power companies will submit these things on ahead of you. And then you can go ahead and start to get into your inspection, schedule stuff where you might have to have structural inspection, civ inspection, electrical, if there's a fire in any kind of, requirement in your particular area, because you're going to have maybe offices or maybe a maintenance area and maybe a loading dock and things that you're going to have humans always there on. You're probably going to need some kind of fire suppression. If it's sprinklers, all that stuff, you'll end up having those kind of inspections too that you need to account for in your schedule and when that can occur. Then we're going to go right into like procurement activities. Some of this stuff, again, runs in parallel. We have a lot of breakout here of just the high level categories from a simple standpoint. So, the procurement purchase, you're going to want to track that when it's coming, when the bills of lading are landing, and understand that, you're going to have a potential just logistical capture of like when things are going to load and where you're going to store them. If you need insurance on them, are you going to put them on containers on site? Or are you going to have them stored in a local warehouse? Or are you going to go straight to racking because you've set up your procurement to where the machines show up when the building's done? It all comes back down to what you're looking at from a target on ASIC standpoint. And then like the networking and security, purchasing the core things that are going to be, if it's Starlink or terrestrial internet, your core router, switching, aggregation, Wi-Fi, NVR, which is like your network video recorder, if any kind of fiber runs, any of that stuff, any of the civ work that will go into those. Like if you're saying between containers, you want to bury, a 2-inch pipe to be able to run fiber through, that sort of thing. You need to have all that stuff pre-planned as part of the construction piece, but the procurement of those items may need to come sooner than later. Having them on the schedule is critical though, to understand when and what you need. Cameras, sensors, environmental sensors. We put in the Ubiquity smaller environmental sensors for like water, dampness, sound, motion, for each of those things, humidity. We want to track all those things in the farm, both on the hot and cold lane side. And then, any kind of physical barriers that you want. It might be a fencing strategy if you need to address noise. It might be like a physical berm where you're putting in like a land, like raising it and then putting, some kind of landscaping, maybe pines or trees to kind of sound dampen. Just sometimes you have physical barriers. Maybe you don't want people looking in on the site and you just raise the land around it. That sort of thing. Motion detection inside for like personnel and door entry and exit. Having a security plan for your door exits. At the end of the day, you're probably putting in $1 million plus into a facility like this. You're probably going to want to have it secure in some capacity, if that's key carded, if it's just some kind of capture of when the door's open and when it's closed, that sort of thing. Again, we use Ubiquity equipment. It has a lot of that stuff built in to the core routing aspects of the OS, and then you can get physical devices for like door entry when things are open and closed, that sort of stuff. But having that plan, you everything I'm talking about is all time in process and making sure that you're capturing. You don't want to be doing it towards the end. You You want to turn on machines and you want them secure. So this is part of that process of capture and making sure those things are moving along too. And of course, there's costs associated to all this stuff. We're in the procurement section here. So, on the GC and the construction sides, which I would call, it gets into an in-plant and out-of-plant activity. In-plant or out-of-plant activity is the facility itself. It could be the containers at the site, that sort of stuff. And then what's all the stuff around it, or with just supporting the construction of that project. So, as the power company providing you the transformers, what kind are they? You're going to need those secondary connections for the electricians. What are the setbacks for those? What kind of racking are you going to use? Are you building something internally? Is there power cabinets, something that already has the breakers in it for all this, the sub breakers? Are you going to use PDUs down to each spot that have breakers built into those? What's your points of disconnect and your points of fault tolerance, right? Those are things that are going to be required from the electrician side. If you have an electrical event on the outside at, let's say, a substation, and it's transcending into your facility, you're going to want fault breaks down the process. There is an NEC compliance guide, which is National Electrician, I think, Commission, or I don't know the exact acronym for NEC, but the NEC is the compliance for electrical work. You're going to have to be electrically sound there, and it's going to have to be signed off from an inspector, right, to understand your load factors and stuff that they're going down that way. Your PDUs, your exhaust fans, are you going to use just natural air flow through the facility? What's the CFM look like? What's your filtration standpoint look like? Louvers, filters, stuff like that are going to be inputs to the construction process. The construction GC is going to build you a building, and this is going to be new to them for putting together like where the airflow and stuff. They're going to be looking to folks like us or somebody that you guys are also consulting with that has built these and understands what the CFM requirements and movement through a particular area and what that spacing looks like. And you don't want hot zones, and you don't want too cold of zones, or where material, or if you have heavy snow in like the north, you don't want to be like cooking your machines, or putting a whole bunch of snow on your machines because you didn't have your filter set up right, or it's too close. Those sorts of things they're going to need. Once you get all that stuff, as things are getting ordered, you're going to be having to track a logistics thread, essentially. So you can think of each of these bigger areas here, from procurement to logistics. Again, it's not a linear top-down, normal Gantt charted schedule where things naturally kind of flow outward to the right. A lot of these things happen simultaneously. Think of them like project threads. Like you have procurement, you have logistics that you're tracking in real time. All of these different aspects you want in one single view that you can kind of get one-stop shop on your view, right? So from an ASIC delivery, that might break out. I'll give you an example here. Who's the broker? How many units are we going? What's the expected amount of units? Just having that just in the project schedule gives you an idea of what to tie from a logistics standpoint. Tell folks downrange, hey, this is when it's showing up. This is when you need to address it. You might, and there's a whole bunch of sub activities that are under that we really haven't broke out into this project schedule, but under this particular thing, there could be a separate sub thread under here where if I go in here and just insert above this one, I would go in here and I would say, a DOA testing, testing. Here we go. Well, I misspelled it, but that's okay. Let's get that right there. Testing. Like you would put that under this one here, bump that over, and now I would have, did that lock get tested? And then essentially who is, a particular person, that we would put under this particular thing. So if I was putting myself on it, there we go. So you guys can see that, like, I would assign myself to that, right? Or whoever is in whoever you've loaded in here to an assignment task wise, who's in there, right? So then is that a subtract item to make sure, hey, everything's back? Because you're going to have a timeline on this. So that having a 7-day DOA, you're going to put on your start and your end date that's a critical path item. You're going to flag it as saying, hey, this is important to me. I'm going to flag that as red. I need that done. Critical path would be a flag there. You can set that right now we have set as at risk, but we could create, in some of our projects, we've created a separate column here to say critical path. And then we flag that as like blue. And then all the blue items, you can sort by those. Those are things that have to be done. You have to pay attention to them. They're the first thing we talk about. So on something that we have a dependency on of like DOA testing for machines, that's a critical piece of it. So under that would also be maybe a deployment plan where they're going to go, asset tagging, firmware, all those different things would be falled underneath those particular location within the schedule. Your networking gear, your security gear, again, this would all be broken down based on, so typically we'll put a PO. So I'll put underneath that, I would put in, once a PO is cut for the shipment of it, I would then have a line underneath that network gear on what PO is showing up and when it's expected. That then would then have sub-activities of the deployment schedule of those particular things. So whoever's handling the installation of all the networking equipment, when that's going to happen, who's running the lines, and have they completed it, right? So that's a whole other sub-schedule that might have 5 to 10 items under that per various tower. You know, a tower might be, in our case, on this build, this example build here, might have 90 machines per tower, right? So those are going to be like 12 to 14 foot long sections that are probably 8 foot in height, and you're going to have 90 machines across that, right? That would be considered one tower. Well, that is going to be a couple 48 port switches that I know I need to get wired into there to support all of those 90 machines, or I'm going to be using unmanaged switches. Maybe there's 4 24 port switches, and that's going to feed up into a single, 48 port, and each of those are going to have separate VLANs. That sort of stuff is what I'm talking about in there. So there's a whole bunch of activity on configuration that goes into the deployment of this gear that would then be captured within this project schedule to show that it's being done. Infrastructure aspects, keeping track of like transformer deliveries, all that sort of thing too in a project schedule to know when it's coming. Again, like a lot of people do these kind of builds and stuff, and they do it purely from like spreadsheet tracking list, and there's a ton of nuance that's not captured. I like to try to capture all that and understand, and we improve, see what you do a post-mortem after each of these core phases. Like this would be the second phase kind of setup where we have like the pre-planning and the acceptance to kick off into the construction, and then construction would then go into deployment. Deployment would then go into operations. Those 4 phases should have checkpoints of like what went bad, went good, went ugly, right? So like you want to learn from those things, and it's very nuanced to each area that you're in, because certain locations may have different rules that have caused you pain that, or in other locations you will not have that pain. So having that and an understanding, if you're going to build in that location again, is a good understanding to keep capture of. So if we get into like construction phase, and then we're going to wrap this one up after this construction phase, because O&M is like its own little separate video. So this is just the build aspects. So going in, the out of plan activities that you have to keep track of, these are different contractors, folks that might be part of it. There might be 2 contractors doing it that you're tracking and seeing. So from like a site excavation, you may have one person that's just doing your leveling and stuff, and then you're going to have like a gravel company come in and go and set your gravel and pack it down and all that. So tracking your site excavation, your gravel and leveling, getting your foundations in, right? Foundations come with a lot of different things, like the underground for like any kind of water or sewer that you need, any kind of drainage that you need will come in that kind of phase. And under that, you would have a whole bunch of separate breakouts on those activities and when they're going to occur and who's going to do them, right? So you're going to keep track of that. And then of course, you have all your cost elements under each one of those: plumbing, sewer, drainage, if applicable. Like if you're just doing like our substation that we have near here that we have 4 containers at, there was no sewage or drainage, all that. The drainage plan we inherited from the substation already. We had already had addressed where all the water was going to go, and that already had culverts and stuff in place. We inherited a lot of that. These are things when you're choosing a site selection, do you save all of these other aspects? Because the site already has a lot of that done. That's some of the stuff that ends up saving you some costs there. But having those kind of things roughed in, then you actually go into the build. You got framing, you got walls, you got louvers, you got venting, you got material. What's it going to be made of? Is it going to be a stick building versus with steel outside, or is it going to be a full metal steel building? Might take a little longer. You're doing stuff with faceting things. You might have to have welding. There's different aspects of that build process from that GC that's going to bring you into it. And then you're going to have some custom requirements. So you have all the permitting and stuff to build the building or construct it. But then you're going to have the in-plant activities also that kind of flow in, which is like the racking and hot lane and cold lane setup. You know, how are the racks going to go? How are you going to separate those air channels? Then you got your electric work, your distribution disconnects. Is that required? Can you go directly to, you know, your panel distribution? How's the panels going to work? So really the installation aspects of that, you know, before we were talking procurement and delivery. Now this is actually installation of those things. Are you missing parts? Do they have everything that they need there? How's the PDUs going to go? Have you had to source the PDUs? Where are those coming? When do you need those in? So you would have like some aspects to the PDU install from procurement, logistics, and then ultimately deployment. You know, driveway and parking. There's a lighting plan there. Do you need to have, you know, it lit up? All these things come part of that initial planning and build phase that you know where electric needs to be to put a light plan together. Then you get into what I call kind of our in-plant BBT activities, the stuff that typically we would do. All the stuff to the north of that, we're working with GCs, somebody that's certified, that's built buildings. We're working with, you know, a lot of different engineers related to that stuff. So we're also helping them from an organization and management aspect, but we're making sure that these things are being done. And sometimes the builder will come to you with all their own plan of all the things, and you just import, you know, what that looks like, to just track that it is happening. How can you help them? Is there, you know, things that you can grease to get it done faster, that sort of stuff. So the in-plant activities, like from the network wiring that I was already talking about, camera deployment, you know, then again, I had then there that ASIC DOE testing, our DOA testing, you know, submit the results to the vendors. I mean, you got to track that. Did you submit? I've had a couple instances where we've done all of it, but we never submitted the results to somebody. Or, you know, our team, you know, thought they did it, but they didn't do it. So like I have a checkpoint in there now. Did we send this to the downrange team on time? You know, what's the tracking mechanism there? Making sure that you've completed it, and are weekends included or not? That, you know, weekends are going to cost you more, right? You're going to have people come in on weekends. You're doing overtime and pricing. DOA testing typically is just a linear time. And that's one cost component that people just don't understand that cost them money, right? There's aspects that I've seen in these projects where there's like, why is this costing us more money? It's like, well, I had to have people DOA test on a Saturday and a Sunday. You know, they work 7 days. That's going to be expensive. And, you know, you got to have that an understanding if like that's probably going to cost more money, and you got to budget for that, right? So in mining, this is what it is. This is not a necessity. It's a, you know, you're going in and making a speculative investment to be a participant in a network, and you're trying to control your cost to remain a participant. So while you can save some money, if you're buying used machines, you're going to have a DOA cycle that might lead you into the weekend. You know, going through all the testing phase of making sure the network core is validating. When we were out in our North Carolina location, that was 6,000 machine deployment. There's a lot of nuance to the networking aspect when you start talking about priority management through switch aggregation. You just can't plug in 6,000 machines and hope that, you know, even a pretty high-end server can handle all that chatter. If you have machines that shut down and come back up on, you know, a network, you know, a curtailment event, you essentially are blinking out 6,000 machines and turning them all back on, and all of them are hitting the network at the same time. So when people make, you know, I've seen comments before online like, why are you guys putting fiber back in, you know, 10 gig to each of the core switches, and then, you know, 25 gig from your aggregation to your core. And they're just like, why do you have that? That's like more for like data center. I'm like, well, when you start talking 6,000 machines with 4K cameras, maybe 12 of them deployed to an NVR, now you're talking about 4K 60 frame per second video being streamed on the same network as all your Bitcoin mining. And then you have all your other ancillary network services on there. You're going to want some bandwidth. You don't want to do this with 100 equipment, my dudes. So you can't cheap out on that. You need to have a good resilient network. If you're going to be spending $1 million on these facilities, you need good network equipment. It's part of the cost of doing business to keep you sustainable. So having the right equipment in there, configured correctly with the right network propagation to ensure that it's going through the correct sequence when it's starting to boot up things. You're not just hitting saturating the network right away is a critical requirement. again, rack installation. You may have to have material, AVHC tape, things that are keeping those any kind of blowback from the hot lane into the facility. There's a lot of like nuanced things at the very end when you get machines deployed in there to make sure everything's all nice and taped up, and it's solid from like an air draft issue standpoint. Floor cleanups, your cleanup stuff, rack adjustments that you need. Tracking if how many machines have been deployed per tower. Cable pairing, how all of those aspects come together. I have a lot of these different, from heat shielding, tape and seal, VLANs. So the virtual LANs that you'll have segmented on your network to understand what pod is where, and that plays into your site map and make sure that the routing's appropriately especially when you start talking about a lot of machines like this. So these are like core elements, cradle to grave, from construction, permitting, and all this. I'm hoping that this works. This was a good session for you guys. We try to kind of open up some of this. I'm going to export this setup out to a PDF for folks. That way you can kind of go through it and just look through kind of the design. Maybe you can replicate it, put in your own kind of steps and processes. I'm trying to make sure that we're bringing some good content to you guys related to, just some substance. It's not just all style. There's a lot of substance in this, and how to get you guys, mining, the aspects of Bitcoin in general. I'll switch off this camera here. I'll move to the main camera. The aspects of being a participant in this space. Oh, look at this! It didn't go full screen on my camera view. That's hilarious. Is knowing what you're getting into if you're going to do it at scale, or if you have a group of folks that are wanting to get into it. What I want to do now is kind of pivot and show you guys essentially the joint venture that we're with. And now that we're going into essentially our second phase of builds, I'm going to play you guys, essentially it's an ad for us and our joint venture and what we got going on, and then give you guys in the links below of these videos, I'm going to have how you can get in contact with our team in relation to the larger build stuff. And then if you just want to go straight to BitsBeTrippin.io and hit up any of our services or any of that kind of stuff, we can help you too. Maybe it's just 1 hour, maybe it's a full project. Who knows, my dudes? But I'm going to play this real quick, and then we'll come back and I'll talk briefly with any questions that you guys have, and then we'll wrap this one up. Let's go ahead and play this thing real quick, and then we'll cut over.
Chicago Atlantic Digital Mining Fund was established in 2021 to allow a vehicle for investors to put their money to work in a pure play industrial scale Bitcoin mining fund. We have experienced money managers that manage a publicly traded mortgage REIT and over $1.3 billion of assets under management. We do not build gigantic, expensive buildings that have lots of cost overruns. Rather, we utilize mobile data centers that allow us to move our operations to more favorable conditions if the opportunity arises. We can deploy these in a matter of weeks, not years. And this is an example of how our fund, while we don't control the price of Bitcoin, we do control cost. And if you compare us to the publicly traded funds and companies, our cost to mine a Bitcoin is substantially less than the heavily bloated publicly traded miners.
What really differentiates us is the experience that myself and the team bring. Over 26 years in business and financial management. I feel like we're the best team for that, given that set of experience. And then you top that off with 13 plus years now in this Bitcoin space too, from an operation and management standpoint.
Because the largest cost input for a Bitcoin mining operation is the cost of electricity, we're targeting locations that have the absolute lowest cost of energy.
When you're planning out a site and you're looking at the costs that come with that, one of the leanest ways to approach that is get as close to the power source as possible. So if you're at a power plant or a substation which transmits that power, being as close as possible to that really leans your cost out.
We utilized our mobile data centers, and we were up and ready and deployed in several months versus years. We have very low cost of power, fixed, hedged. The advantage of locating next to and adjacent to a utility substation is the utility's already built lots of infrastructure that secures the premises. In addition, we bring our own proprietary and advanced security system. So between both systems, we have a very secure facility.
From a costing standpoint, it just really lowers down that total cost of ownership, bringing more value to the investor because we're not having to spend all this extra capital in a facility and then operating that. It's just essentially like a network closet that's sitting on a substation. So it really leans out that total cost. We look at the most recent drawdown to $16,000 Bitcoin price, and difficulty was still rising. We were still able to operate. And there's a lot of places out there that were not able to because they weren't structured in that way.
We're raising capital through the Chicago Atlantic Digital Mining Fund, which is available to investors with a minimum investment of $100,000.
Well, what's in store, we're looking to expand and take this working formula that we have and expand that out to much larger facilities and really be able to channel that supply chain to even drive our costs down further, right, as we start to get larger operations.
So the investors have the option to go long on Bitcoin or move it to cash or a combination, which is a unique structure in today's environment where most people are just relegated to buying a publicly traded miner, which, as we've discussed before, is significant overhead and huge cost burdens. And this time period will not be forever. And so there's really never been a better time to form a digital mining company than it is right now.
You guys got to see who our group is that we work with from a joint venture and a capital aspect. That's Chicago Atlantic. So we have close to 60 megawatts with them across the different ventures that we have deployed, and then we have a location here, 5 megawatts with them too, and we're looking to expand those locations and expand even more with them. So this gives everybody an opportunity that wanted to work with BBT and our group an opportunity there, and there'll be descriptions below. We'll have how to access that, or if you're trying to do your own location, we work directly with you guys too. So that was part of the agreement that I had set up originally with our capital partners, is that I'm going to continue to build for individuals too. So like, it wasn't that we were just taking all the effort with us and building out our own location. I think it's very critical for individual participants to have the opportunities to build their own locations. So that is part of our core mission in general, is to keep things as decentralized as possible. Why we are building our own facilities and competing with publicly traded miners. When you really look at it at the end of the scale, is Bitcoin mining in general, we're all on the same page here. We're all going for security of the network, and we all participate in the yields, right? So more folks reinforcing this network and more proliferation of support across the Bitcoin ecosystem in the US, at least for us, has been a net positive aspect for just participation, right? So having the ability to be agile and not tied on publicly traded aspects, meaning like there's a lot of extra overhead that comes with publicly traded from just all the requirements that come with being a publicly traded and raising capital. Why capital is easier to raise as a publicly traded, having a private approach to it and individuals being part of it, I think is so far been the best way. It allows us to super lean out cost and then just focus on the core elements to get the build done. But having some options for you guys to be able to click through and, crawl, walk, run your way into maybe a build with getting a little bit of information, maybe cultivating your local area, I think is very critical. And again, we've helped Bitcoin mines from Canada to Nebraska to Pennsylvania to Florida, Oklahoma, North Dakota, South Dakota, Wisconsin, Illinois, and North Carolina, essentially. I haven't done much in Texas, my dudes. There's a lot of people already very qualified down there in Texas. If you're down in Texas, I can send you some people I know down there. But hopefully this was good information for you guys. I'm going to try to answer some quick questions. It's been real, my dudes. Have the good rest of your Saturday. Again, we're going to be working to get the live stream on Friday next week, so on the 8th, and then I'm going on the Ravencoin cruise, and we'll have the Friday live stream the following Friday on the actual cruise. Hopefully we can have Tron Black and some of the folks in the Ravencoin space talking on that. So we're going to try it. I mean, ship's got Starlink, so we'll see on what level of production that's going to be, but we're going to try to do a live stream on the ship. So we'll have that, and then the following week after that, I'm actually going to be in Europe, and we're going to have a stream in Europe while we're out there too. So it's going to be a busy next couple weeks, and then we'll be right back with you guys. So